The markets began the day significantly lower in early morning trade, and the Nifty was down 70, 80, 90 points in early trade. But towards noon, there was a gradual recovery in the markets today. Thanks to strong cues from across Europe, and the Dow futures also was pointed higher, which is why we saw a good recovery in the markets. The Nifty ended the day at around 18.40 points higher, while the Sensex ended the day about 19 points higher. Now, but for the week, if you see, the markets were lower. Out of 6 weeks, 5 weeks the markets have ended lower. Except last week when it ended higher, we've seen 5 out of 6 weeks the markets ending lower. Today was really a volatile day, and from 80-90 points drop, we've seen a sharp recovery, and with the Nifty ending 18 points higher. Coming to the gainers today, we had UPL clearly with a gain of 4.14%, was among the top Nifty gainers in trade. This was followed by Yes Bank. Now, Yes Bank raised about 2,000 crores by way of QIP at around 83.55 paise. This led to some buying in the stock of Yes Bank, as investors were hopeful that the fresh infusion of capital will allow growth for a while at the bank. The bank also said that they are looking to raise even more money as the months go by. Coming to the losers, today we did not see any participation from the heavyweights. TCS was clearly the top loser, and we also saw heavyweights like Reliance, HDFC Bank not participating too much in today's gains. In fact, they ended flat to negative on the negative side. Trend hit a 52-week high, and there was great amount of buying in trend that we saw today. One interesting stock today was really Indiabulls Housing. It began the day at around 7 to 8%, with 7 to 8% cut because of a Moody's downgrade on its ratings. But towards the last 1-2 hours of trade, it really recovered to end slightly in the negative. So we saw a great amount of recovery in the stock of Indiabulls Housing Finance. Coming to the outlook for next week, we expect the markets to really trade in a range, and there are not too many domestic cues. But really, what will the market men will look at is the cues coming in from US and Europe. This week it was very volatile session. We've had the entire week. It was actually a truncated week, and we only saw trading in 3 out of 5 days, because Monday was closed for Eid. Again, Thursday the markets were closed on account of Independence Day holiday. The global, we will largely react to global markets next week. Remember that this week we saw the yield curve inverse in the US, which pointed to a chances of a recession. That led to some selling this week in the US markets. The China-US tariff trade war continues, and we don't know where that is headed. So as news keeps coming from the global market, we'll see more and more volatility as the days go by. So brace for a fresh bout of volatility next week, and actually we are living in very interesting times. So investors should be a little cautious and not put their all of their money to work, and be a little circumspect and invest in small amounts. And it's always advisable to stay on cash, because we don't know when there will be a sharp decline in the markets.